What's up, everybody? It's Matt, and you're here to Ask Matt. We're episode 20 tonight, or today's episode is going to be amazing, and I appreciate everybody tuning in. So real quick, why I'm here, just again, I'm here to bring you value. I'm here to show you what I'm seeing in the market on a daily basis, and I give that to you so you know the direction of the market, so you know when the institutions are trying to screw with you and play tricks and you think there's going to be a sell-off or the market's going to go off a cliff. You're ready for it. My platform members, we knew about every time we knew the volatility today, and we knew the drop-offs, and we knew the spikes. And I'm going to talk about specific instances later, but first a quick summary. So pre-market, what did we see? Okay, so Israel attacked Palestine yet again. There was a sell-off in the euro notes, euro bonds in Spain, which meant higher interest rates for Spain. Our 10-year was on the rise a little. Crypto tanked over a couple of day period, probably like anywhere from 20 to 70%, depending on what crypto you're in. So everybody's and the market went up on Thursday and Friday, and there was demand, which I pointed out. Again, as I mentioned, I thought we were seeing a reversal. I'm a contrarian. When people see things going down, I see things going up. I look at different patterns. I think outside the box. I worked for the institutions, and now I give to you. I give to YouTube. I give to Twitter. I give everywhere. All right. Let's just see. Oh, so the good part about this morning, what did I tell everybody? The good thing about today is institutions were still on the side buying. So it wasn't going to go down more than a certain amount. And what did we see? We saw the turnaround. So I told you at 11:20 a.m. when I do my video, because the most important time in the market is 10:50 a.m. till about 11 a.m. And that tells you the direction of the market for the remainder of the day. So don't get fooled by that other stuff that happens. But today I said, don't pay attention to that timeline. It doesn't make sense. Yes, the market will probably go down more, but I know it sounds weird, but I'm bullish, meaning I think there's going to be a recovery. And I specifically mentioned 3 p.m. today. I said 3 p.m. today, we're going to see one of two things. And they could either pull the rug out beneath my legs, which I would just surprise me. But I put that at about 20%. And I said 1 in 5 times that'll probably happen, or 80% chance it's going to accelerate and be really strong at the end of the day. And the great thing about it is I gave out certain positions, and I'm going to go over certain positions before we help you. 2 things I was going to cover today, real quick lessons: blowing up your account and compounding your issues. So I'll get to them real quick. Blowing up your account. So I know people have told me before, because they contacted me on the side. They're like, I blew up my account. So I saw different people, and I helped different people today. But what I told people is to sell your position when it spikes. Take the money on the side. You don't have to go right into another position. And that's where I get into the compounding problem. Say you're in a bad position and you're off 40%, and you think the market's going to throw up and collapse even more. And you're like, I don't want to lose 80%. So you sell at 40%. And I've spoken about this before. Instead, you go out of FCX into CLF, or you go out of Delta Airlines and you go into United Airlines. You're compounding the issue. If Delta happens to be going down, United's going to go down. If Carnival's going down, Norwegian will go down. The point is, I've done it before. I've exited out of a Bitcoin stock option, and then I went into another one, and I'm like, okay, well, I went from one Bitcoin stock to a crypto exchange. Same thing, they move together. So, I understand compounding your problem. My point is, when you compound your problem, you're down 40%, then you enter into another position and you lose 30% on that. Then you get scared and you enter into another position. You can't sell that position because you can't make 3-day trades in one day. So you watch it go down again. And by the time you're done compounding your position, rather than sticking with your initial gut, which might have rebounded a little, you're down 90% on the day instead of being down 5 or 6%. So I implore you, I ask you to please think before you act. Take time. There are no positions or no alerts that are that dire to get in. And I'll speak about the alerts today. The alerts today, UVXY, I alerted at $4.60. I said it was going down. Then at $4.63, I said it was going down. And then at $4.71, I said, if you missed the first 2 alerts, please buy your UVXY puts. All this ETF knows is how to go down. Now, if you look at other message boards, you'll see people writing comments like, oh, this stock is bottomed. First of all, when they call it a stock, they don't know what they're talking about. It's an exchange-traded fund, all right? Next, it's having a 10-for-1 reverse split, meaning if the ETF is trading at $3.50 by May 26th, on May 27th, it'll be trading at $35. So should you have puts that are $5 puts, guess what? They will be $50 puts. Nobody shares this with you. It's common sense. 10-to-1 reverse. You still have 1 contract, 2 contracts, same number of contracts. But it'll be a reverse. So instead of $5.50, instead of $4.50, $45. So anyway, my alert, UVXY going down. Then I alerted Tesla. I said it's not an alert. I'm taking a position. I think Tesla's going back up today, and I am 7 wins, 2 losses on Tesla options. And what happened the other day? Tesla spiked 10 points. So Matt is making money. I think I'm up like 20% on that one. Let's talk about some other stocks real quick. eBay is strong as can be. Again, so real quick, I'm not one of those gurus who tout stocks. I don't tell you to go into an option, go into a position, go into this, and I don't do it myself. I trade through transparency. If you're part of my platform, 349 Trading, everything's organic, okay? So I share through transparency. Everybody makes their own exit points. Sometimes I go for 100%, sometimes I go for 50%. But we're going to talk about some real strong stocks first. Please pay this forward, share this video with somebody, all right? I know we have a strong following, but we're not reaching enough. I'm here not to tout good trades. I'm not a guru talking about a stock, how it's automatically going to go up, because there's no such thing. I don't have a crystal ball. I tell you what I track in the market. And so far, you guys who follow me know I've been on fire. I've been on fire probably for like 5 weeks now, minus maybe 2 days. And then we had the bad week. So yeah, I'd say about 20 days, good days, 7 bad days. All in all, we have a process. There are rules on my platform, 349trading.com. I make rules about options, about stocks. It teaches you how to enter the right way. So if you're just throwing around money and you're like, oh, AMC's up 5%, I'm going to buy it today, or GameStop's up 8% today, I'm going to buy it right here. No, I'm not saying those stocks won't go higher. All right. But there's a way to enter. You purchase on the dips. It's like getting a sale. So you're going to pick out a pair of jeans. The jeans are $200. The sales lady comes over and she whispers in your ear because she thinks you're cute. Or a man comes over and thinks you're cute. Who cares? All right. He's telling you it's going to be 20% off if you wait 2 days or if you wait a day. Guess what? You're going to go back tomorrow and you're going to buy those $200 jeans for what? $1.60. All right. Then you're going to try and haggle a little more. Point is, you're getting a sale price. You don't want to overpay when you go into GameStop, AMC, or any other stocks like that. But look at some charts, okay? I'll mention another stock, eBay. I love eBay. Do you see the chart? It just curls. It's so strong. Even when the market was weak and tech was down 100 points, something like that, eBay was holding strong. Then when the market rebounded, eBay was strong. There was buying. NFTs were strong. eBay is going to start selling NFTs. Okay, apps. Another stock I'm into. 1 second. APPS. I alerted the original options, I think, at $2.25. They closed yesterday at $2.25. Okay, so the stock is apps, APPS. The option expires, I believe, the 28th of May, $59 strike. Again, I alerted at $2.25, right? Some people got it at $2.20. It went up to $2.50 by close. Some people probably bought in. It went down to $1.30 today. So why am I bragging about that? I'm bragging about it because when it went down to $1.30, I bought in some more call options at $1.35 and some at $1.30, and I alerted all of you. I said it just dropped, and we have a rule about options. What's the option rule? What? Yes, when your option price is down 40 or 50%, you double down. Meaning, say you have 2 contracts and your options price is down 50%, and you're pretty sure you're going to be right about the stock. What do? When it goes down 40 or 50%, you buy 4 contracts. You had 2, you buy 4, now you have 6. All right, when not to do it. Say my options expires this Friday and it's out of the money. So if today was Friday, it would be completely worthless. There's no reason to throw good money after bad. So I speak about ways to average down. I have an options video, actually. It just got released Sunday night. So if you like this, subscribe to my YouTube channel, push the notifications. I do this live every day at 4:30. The great thing is options video. It just got released. I simplify it. I give you one example of an option that I entered into May 13th, which was Thursday. And I think it's going to return anywhere from 100 to 400%. So you're not too late. Yes, it's going to return 100 to 400. I'm guaranteed it. It's up already. I'm a smart guy, dude. I entered at the right point. I picked my entry point. It went down. I explained how to use Delta in my options video. So if you're like, Delta, what the hell is that? I hear people talking about Greeks. Watch my video, subscribe, go to it. I think it's called Options Made Easy or Options Made Simple. All right, let's go to more positions. Tesla, I told you I took a ride on Tesla up 10 points. I'm up like 20% on that. Okay, TYME. My platform members know I've been talking about this. I mentioned it the other night as well. TYME. It's been beaten up. It started to have a reversal at $1.15. I alerted and I said, I really like it strong. Then volume spiked, and I track volume. So if you don't know me, I'm Matt. I track volume, I track demand, and I see patterns, and I see them first. That's what I'm about, all right? I think different than everybody else. I'm a contrarian, all right? When people see bad things, I see good things, and it's always about entry point and exit point and having a strategy in between. That's how you make money. That's what I teach you people. And when I say you people, we have a family, 349 family. It's my platform, but everybody contributes. It's just crazy. I didn't think it would be that popular as far as the family dynamic, but you guys really care for each other. And that's important when everybody's trading. If you're by yourself, so right now, if you feel by yourself and you have no support, whether you're making the right decision, wrong decision, understand my rules, don't understand my rules, have some theories of your own. People throw it out on my platform all the time, right? And then people are like, that's a good idea. I was thinking that. Someone mentioned they had money on the side because I said the rug could get pulled out under our feet at 3 p.m. Possibly, like 20% chance that happens. And somebody said, I've got money on the side. And the other person said, me too. I'm waiting for that explosion for it to fall off the cliff because they had a plan. It didn't happen. I was right. It didn't happen. There was strong buying. But if it did happen, they had a plan, they would have got great entry, and I would have been a little jealous. However, I was correct. The UVXY will go down. Last position, SQQQ, as NASDAQ goes up, SQQQ goes down. It's an exchange-traded fund again. If it's going down, why am I bragging about it? Because I say to buy put options. I alerted at $12.34, buy put options. It's going down. What happened after that? 10-minute rule, 20-minute rule. It spiked. Because I'm always wrong. I'm always early. That's the great thing about me. If you're following me, unlike other gurus who claim profit like 20 minutes after the trade, hey, I got in and out, 100% profit. Not me. I got in. You guys get 10% better, 20% better sometimes. When I make 40%, you make 60%. What the hell is better than that? Nothing's better than that. All right, so yeah, SQQQ, it's going down. There's no doubt. I don't know what it was at, 1234. Maybe it's at 1220 now, 1218. I think it's going down. I mentioned tech was strong. If you watched my broadcast, episode 17, I believe it was, I mentioned the reversal. What I mentioned is we're looking like a W. So the third leg of the W, we were just at the base. And I said, imagine if we're right and there is a W and tech strong. And what I warned is it won't go from one end of the pendulum to the other, that it's going to be in between. So you'll have time to get in. Tech will struggle some days. When did tech struggle today? Today. Today was your day to get in. If you were on the sidelines, please, if I like something and you could get in better, it's probably good. Want to talk about a couple of, let's see if we have other couple of positions. Oh, so what did I hear real quick today on CNBC? What are they talking about? What is the market? It's a stock pickers market. They were saying, do you think there's going to be a correction? Now, I'll pay attention because a lot of you guys ask me the same question. Will there be a correction? What will it look like? So here we go. If there's a correction, they're talking about 10 or 15%. I don't see it. Why? Because I don't see Delta going down by $6 at 15%. Not happening. Dow's not correcting 10 or 15%. So that's why I'm bullish on the Dow. Same thing with tech. We know some of these tech symbols have been so beat up. So I mentioned Blink today when it peaked under $30. I said, quick swing trade, $30. It went to 31. I didn't enter Blink. I chose Tesla instead because I like Tesla. And Tesla's a real company and Blink is not really a company. Went to 31. You could have exited out 3% or it went back down. But again, I think there's demand. I think there's demand for the solars. Now, why? President Biden spoke today. If you didn't know that, the market's tanked because of it. He always does that to the market, same with Jay Powell. But what's going to happen? He's going to talk about his plan, his green energy, his infrastructure plan. So materials companies spiked even when the market was bad today. If you look at FCX or Cleveland Cliffs, CLF, or X, which is just a steel company, or any materials play, they were probably very strong today. So they're going to continue to be strong. People, institutions aren't buying into certain places. If you saw demand in your stock today, United, Delta, they're here to stay. They don't just buy in for like a minute. Institutions are buying in for a while. So this is what I do. I deliver what institutions are thinking. I deliver the psychology behind trading. So yes, you guys make all the decisions. I'm providing information. That's what I am. I'm data. I give you another way to look at what the market is. And I see patterns and I show you patterns so that you could see them on your own. Now, some people reach out on the side. Is this a good play? Is that a good play? I only charge $3.49 a week. I'm not a financial advisor, and I can't tell you if this specific option is good. But if I'm in the stock or the option, I like it. I did well. When I bought eBay today, I bought $20,000 worth of eBay today, or a little under that, and it went up like 1%. Point is, I share that with you. I said, I'm supporting my options position. I'm buying stock because I think stock could go up $4, $5, $6, $7, $8. Yes, it's 20,000 shares. What did I get? Like 600 and something shares. I don't know. It wasn't a lot of shares. Point is, if I can make $5,000, I'll take it. Today I only made like 150 or 200 on the side, but whatever. That's still good. It's still 1%. It's still money that, again, we're grinding. So for those of you who follow me, are like, I want to hit a home run. And I try and pick out instantaneous stocks. Now, the whole thing the other day, remember I got so excited. I think it was episode 17 or 18. The market got trounced. And I said, a light bulb moment went off. We're going to kill it going forward because all I'm going to do is give out plays, like option plays in the UVXY, SQQQ, TQQQ. If you don't know what that is, watch my options video and watch how I explain what these ETFs are, okay? I explained them yesterday. I explained them on Friday. Point is, there's a lot of money to be made. Anybody that followed me, and even UVXY mentioned today, you jumped in late or something like that, you got a better price, you're up over 30%. In one day, you're up 30%. So what do? We sell at the peak, we buy at the dip, or we sell at the sell at the dip when we have puts, and we buy at the peak, like with the UVXY, SQQQ. Again, you have to know the market direction, which is why what I do is so important. I'm going to go over a few tickers that I have just to show you, because people were asking about Roblox and some other tickers today. So let me just tell you what I'm seeing real quick. All right, UVXY going down. There was demand for Tesla. I know that guy that did the Long Short movie, right? Dr. Michael Blurry. He thinks Tesla's going down. Again, I don't disagree with him. The true valuation of Tesla is probably down there. However, institutions determine what Tesla's worth is, and people think Tesla's worth is more than it is now. It's amazing how many funds I read that are buying into Tesla right now. So either they're all buying Kathy's shit, or who knows. Okay, so what else do we got? Somebody mentioned it today, HYRE. It's like hire car. I don't know what it is. It spiked today 10%. There was no news. He was shorted. I suggested he got out. It was up 6%. Thank goodness. I think he listened, because it went up 11% at one point. When you're in options, he was down 40%. You got to just cut the cord sometimes. It sucks. You made a bad call. If you made the reverse call, you would have crushed it. You made a bad call. Sometimes you just got to pull the string. That's it. You're done. Take up the 40% loss. Try over. If you ride a bad options position down, he would be down probably close to 60%. If he averaged down and this spiked a little more tomorrow, he'd be down 90%. So this is a proper way. You don't have to average down on every single options play. Okay, let's keep going. What do I got? Fisker was up like 6.5%. There's demand for Fisker. There's demand for Delta. Roblox up 8%. Again, I learned at $65. We are now $76. It's $11. That's probably like 18%. I'm holding Roblox. I think Roblox should have a price target at least in the high 80s, 88, 89. Maybe if it gets to 85 real quick, I'll up that to 92. Yes, you can change your price target. If you have a price target, I think I might have even put 92. If I have a price target and up $27, I bought it at 65. $27, what's that, about 42%? Sounds about right. Plug dipped today hard. However, Plug's going to go with the NASDAQ. If the NASDAQ is strong in the next couple of days, you will see Plug explode. Yes, I have some options later in the week. That's the only thing that works for me. If the NASDAQ is good, it will explode. Now, I'm looking for a good day, a day where it doesn't struggle in the morning or lose 200 points only to rebound 150 points. Let's start out up 20 points, and let's finish the day up 220 points. That would be exciting for me. Oh, real quick. There's this trading chick. She talks about like Evolve, EF, something bioscience, whatever it is. They just did an offering after hours. The stock went from 122 down to $1. Again, these gurus tout these stocks. She stays at 5-star hotels. Not me. What did I eat today? I ate some shit. It didn't cost me anything at all because I am a minimalist. I don't need, expensive things. I need to be correct about the market. That's what I thrive on. I need to educate you guys and help you guys trade better. I helped somebody on the side today. Hopefully it panned out. I helped someone over the weekend with their positions. What did I tell them? Sell on the spike, save some money on the side, enter the correct way. Dude couldn't average down on anything because he followed these gurus into these stocks, and he's down 40%. It was 40%, 49%, 50%. We have rules about averaging down, so you're never going to be a bag holder. If you're in a bad stock, at least you can get out with minimal consequences. For me, it's all risk versus reward. Little risk, big reward. If risk and reward is even, like if I say something can go down $500 or something can go up $500, I don't want to be part of that trade. It gives me no competitive advantage. When I gambled in sports, I was what was considered sharp money or smart money. Meant I had the competitive advantage. I figured out something in the game, doing the live betting based on statistics that gave me the advantage over the house. All right, that's why I was banned from betting that. When I bet blackjack, again, competitive advantage. I won 88% of my sessions. Impossible. No, it's the way I bet and the streaks and the progressive betting that I did. It's how you challenge or take on the market. That is what I'm here for. Not to teach you tricks and tell you have to count cards. I'm here to help you navigate the market. So if you believe that, please share this video. Everything we do is organic. I mentioned enough time. We're almost at 4,000 hours on YouTube, which is just like sick. It takes people 1 year, 2 years. We've been doing it less than a month. The point is, people watch videos. They like them. YouTube shares it. 40% of my watches are from people that are sharing my videos. You guys follow me. Share my videos, please. You guys like me more than YouTube, I think. All right, let's talk about what else we saw. NanoX, NNOX, down 1.5% today. Again, there's strong demand, but with the attacks going on in Israel and Palestine, an Israeli company is hard to invest in right now. 3D, DDD, up another 1.7% today. eBay, up 1.36. I tell you how strong eBay is. EHang, EH. There's a turnaround, but there's also a shorter play with EH, which is why I don't talk about it. But it went up 1.5% today. FCX materials play up 4.5%. Cleveland Cliffs, again, materials play up 7% today. Twitter has rebounded. All right, Twitter 0.168% upside. So if you're looking for a play, okay, here you go. I don't have any position in Twitter. If you're looking for a good play, you've never seen me before. Okay, I'm not like these other guys who get in ahead of time. In fact, I probably won't even take this play because I have enough positions in tech. If you think I am right and Matt is going to be correct and Matt's going to win again, and yes, I say again because lately I've been on fire, tech is going to rebound, tech is going to be strong, and Twitter, which is at $52.60 now. You could probably go to God and Good today, but I know some people that follow me mentioned Twitter. They liked it at 53 and change, so it's not even there. 52.60 on Twitter, and I'm going to tell you where it's going to. I'm going to give you a better price than that. It's going $59, so it's at 50. It's going up $7. It's going up 1.4. Yeah, I mean, it's going to go up $7. So that's what, 14%. If you play options and you pick the right options, you could easily make 100% on that. So what options am I talking about? Again, I have no position in Twitter. If you wanted a safer play, I would say Twitter, June 18 calls at $52 flat. You'll probably pay like $4 and you're hoping it goes to $8, which it would basically go around $59. Yeah. So anyway, Twitter, I like it. I'm not in it. I like it. What else we got going on? Anything interesting? Carnival was up 1% today. Again, Carnival, Delta, good stuff. NFTs were crushing it today. And I'm going to get to your questions real soon. Gap was strong. Churchill. Romeo Power finally picked up 6%. It was so beaten up. I mentioned Blink at 30, right? It's up after hours 1%. So it's back around $31 again. Blink will move with Plug, ChargePoint. That's why I'm telling you, if I like Plug and you like Blink, you can go into Blink. You could score probably 10, 12, 14% in the next couple of days if I'm right about tech and the NASDAQ. So you're not late on these, okay? I happen to like Plug more. Ebon up 10% today. It finished at $3. That's amazing for that stock. Again, if that stock was beat up and they're beating up Bitcoin and they're beating up other cryptos and Coinbase is getting rocked, why wouldn't this crypto exchange get rocked? Because it's already beat up. It's already been shorted. It's found its base at $250. It's at $3. So you could snapshot this right here, all right? Ebon, EBON. I told this to another friend of mine today. It's going to go up 20-something%. Let's say 22%, so we can remember it. 22% in the next, let's pick a number that's easy. I like the number 8. In the next 8 trading days, it's going to go up at least 22% if it doesn't go up 22% in one of those days. Yes, EBON, 22%. That's the number I like. It's $3. So what's 22% of $3? 3.33 is 122. What is that? 70 cents. So I say EBON is $3.70 in the next 2 weeks by the 28th of May. All right, so end of the month, EBON, $3.70. You heard it here first. Thank you. Okay, Canadian Solar, someone mentioned it. Looks beat up still. I like AI. All right, XL moving after hours again. So NEO's probably moving along with XL. TYME up 9%. Again, I love that. Party City, remember I sold it at 10. It's at $9.10. And I'm almost done with my list, but these are all stocks on my list. Amazon strong. Amazon was really strong. Microsoft was up, so Microsoft will probably rebound tomorrow. I know some of you like Alibaba. Now, unless Alibaba has earnings, I would be careful with Alibaba. They're talking about, so what's this type of market? It's a stock picker's market, meaning you must show value. So Facebook, if tech does okay or tech does well, Facebook will explode. All right, you're hearing that here first. I have Facebook. I don't have Facebook options. Facebook's got to be $318, something like that, $316. Actually, probably went down today. Maybe it's $315. It will go to $390. All right, $390. Facebook will be $390 by sometime in the summer. As soon as they do next earnings, right? Facebook always comes out. You're supposed to earn like $5 a share, and they're like, we earned $14 a share. It's just people hate Facebook. I don't even use Facebook, so it is what it is. All right. Oh, you know what? I've got some slides real quick. Let's just see what slides I have. I think I have only 3 of them today. We're going to go to slides, and I'm going to go to questions, and we'll help you. Okay, TYME, yes. So the other day, about 2.5 trading days ago, I mentioned that $1.15. Now, why am I showing this slide since I already spoke about it? I'm showing you this slide because I think this stock's going to bounce hard to $1.65 or $1.70. So if we're at 130 right now, since I'm giving you all these predictions right now, which I don't usually do. So if you follow my live shows, I don't nail price targets all the time unless I'm confident about them. So yeah, $1.65, $1.70 in the next couple week, let's say. All right, next slide, please. See what we got here. All right, we got eBay. So I just mentioned what a powerhouse is. This is a position I entered into this morning. I planned ahead on the dip. I didn't even get the best price. I could have saved about 8% more, and I made at the time, I think 14%. By the end of today, if I was to look now, I think I made over 20%. In fact, I'm pretty curious. So maybe I'll open that up while you go to the next slide. Next slide, SQQQ. Okay, yes, so here was the alert today. For anybody that doesn't follow me, just so you want to know what they look like. SQQQ, I give the current price. I bought puts. The UVXY was currently 460. I bought puts. I put them on my spreadsheet. I used an app for an alert. And then I tell you what I bought specifically. SQQQ, $13 puts. For anybody following along, it's not like the SQQ dive. So you're going to get in a decent position. So $13 was the strike price, 521. So they expire on Friday. I paid $91 per contract. UVXY, same thing. Puts $5. I paid 63 cents. So as long as they go under my break-even point, right, which is $12.09, and then we got $4.37, I'm going to be okay. And anyway, these are what the alerts look like. If anybody got these alerts and got in after me, guess what? You only paid 60 cents because I know people texting me on the sides. I got in for 60 cents, which is 5% better than me. And what else? Another one, I think they got in 88 cents. So that's not so much better. It's like 4% better. Next slide, please. Good. Unless there is no next slide. Oh, there is no next slide. All right, excellent. We're making crazy good time today. I'm just going to check out my eBay options real quick with you guys, and then I'm going to go into questions. So we have questions. My eBay options made 28% today. So anytime can be good. All right. What do I think of Coinbase doing a 2026 senior note private offering? It's okay. So what do people think about Coinbase? They think Coinbase will be over $400 a year from now. I don't know if it takes it 2 years from now and it's $450 or $500. I've heard people say $550 is fair value. How could they call it fair value $550 when the stock, and I'll look at Coinbase right now, I think it's at like $250, $248. I mean, that's basically what they're telling me it was worth. Coin. All right, $248. See, always make predictions. If you're just watching me for the first time, always make a prediction. Think of what the price was the last time you saw it, what the market's been doing, the market sentiment on stock. So I said 248. It closed at 248.24. It was off $10 today. So I could have been up and down $10 off. Anyway, at some point, there's going to be buying. When you see it turn around, and it hasn't happened with Coinbase yet, stocks like Ebon, Futu, Tiger held their own. Tiger, TIGR, haven't spoken about that in a few days. It parsed 17 again. Now, why is that so great? Because there was a short on the other side, but Friday's options haven't expired yet. What are we at Friday? Yeah. So last Friday's options expired. This Friday not. So Coinbase private equity offering, somebody's buying it. The stock's probably worth double. However, offerings are bad. If anybody mentions an offering, it goes down. Okay, so offerings are bad. But Coinbase I like. I mean, I'm not Kathy Wood. I don't have millions of dollars. If somebody gave me millions of dollars, I would definitely hold Coinbase at $250 for at least 3 years. I'll double my money in 3 years. Now, if you didn't know this, it takes 8 years for you to double your money. If you invest through like making 8% in a safe return, tax-free, whatever it is, you're supposed to double your money every 8 years. So when you people are looking for 100% returns in like 3 days or 5 days or 8 days, just realize how silly or ridiculous it sounds. I'm not saying you can't do it. And I look for the same thing. So I'm ridiculous. But you're supposed to double your money every 8 years in a sound investment. Like put 100,000 away. 8 years later, it's supposed to be worth 200,000. Me, I want it worth that tomorrow. You probably want that worth that this afternoon. When I give an options payout, some people say, dude, I'm down 15%. Yes, it's dangerous, and we're always trying to call the bottom. Let's go to the next question, please. Okay, eBay calls UVXY. Yes, so it's paying off. Those are two good ones. I think we're going to crush it again, and we're going to center around a few stocks here and there. Again, everybody, you make your own decisions when you exit out. If 20% is good for you, great. If 80%, good. If 100%, good. You don't have to shoot for 100% on every trade. If you can get in and out without having to worry, that's awesome. If you get in and out at 35%, great. If you get in and out at 50%, great. I like 100% on some trades because it's just easy for me. All right, next question. You guys are doing great. Point target for Roblox. So, again, I think the stock what do we say? It was at 76. Yeah, I'll do it from memory. I bought it at 65. It's at 76. It was up 8% today. So if it goes up another 8%, right, that's another $5.6. That's given. I think 8% is no doubt. If $5.6 on top of where we are, that's $82, right? And then I throw that on about once or twice more. So I'd say about $92. And I think I said that before. In at 65, out at 92, make 42% return. Next question, please. All right, Stuart, use the 442, you're up 17%. Okay, 17% is good. Listen, UVXY hasn't even done what I said it was going to do yet. So let me just explain. UVXY, if anybody doesn't know what it is and you're just watching for the first time, it's the volatility index. You've heard of the VIX, right? The VIX volatility index. So as things happen, like they storm the Capitol, or say there's a storm or a power outage or a gas leak, or they close down that gas thing for the ransomware, the VIX, which is the volatility index, is scared. It's basically a scared. You're scared. It judges how scared people are. So the UVXY is an exchange traded fund. If you can think of it as a company or shares of stock, it basically takes what happens to the VIX and it puts it on steroids, okay? So you multiply what happens by the VIX by 1.5, meaning if there is a spike, and this is my favorite thing to do, anytime there's a spike in volatility, right? They're nervous about the election. Did Trump win? Did Biden win? Oh, Biden speaks and says, oh, we can't pass this bill or something like that. The VIX will spike. People's insecurities will come out. They'll be scared selling. It spikes the UVXY. Anytime there's a spike in the UVXY, you can buy puts. All right, you get them in or at the money. So the UVXY spikes yesterday or 2 days ago to $6.40. I was on Thursday or Wednesday. We all bought puts. And what happened? It went down as low as $4.14, maybe something like that. So it spiked today. What do you think is going to happen? History repeats itself. As long as there's no all-out war in the Middle East. Now, what would be better if somebody came out and said, you know what, there's a truce and there's a peace agreement and they're going to give it 8 days or something like that. You know what would happen? And the oil pipelines opened up and there's no other problem. Let's say the market actually goes up tomorrow. Both the Dow and the Nasdaq go up. The VIX would just drop. It would drop by like 15%. It would be like from $4.60 down to $4. And what am I saying? I'm saying by the end of the week, if nothing crazy happens to the market, that UVXY will be at $4 or under, 401, 402, 398. Point is, you've never traded it. Just look at a put right now. Go to a put. It ends on Friday, so you have Tuesday, Wednesday, Thursday, Friday. If you were to buy it, whatever you pay, 60 cents, it's probably going to be worth double that or at least something ridiculous. I mean, we're going to kill it. Everybody on my platform, we're going to kill it, and I promise you guys going forward, when we have those shitty days in the market and we're in stocks going, oh, what's happening to this? What's happened to 8%? Oh, man, is it over? Yes, it would have been over because we would have been riding the market down and calling the SQQQ. As long as I know the market direction, which I do, I nail it every day. And if I'm off on a day or I wait, yeah, it'll be crazy. Anyway, we're going to kill it. I'm so excited. I couldn't be happier. I'm sorry that it took me like a whole month to figure this out. All right, next question, please. Got it. Matt, your thoughts on Jets? All right, Jets ETF. I have actually heard a couple of people talk about selling that ETF recently. Like when I say people, I mean my friends in New York, people that have a lot of money, people that carry a lot of pull and have a lot of weight. However, I am so bullish on Delta. My options video, which is on YouTube, if you just joined on, subscribe. I just released it on Sunday. It's simplifying options. So if you're confused, you hear me talking about options, watch the video. It's like 14 minutes of goodness. All right. So anyway, I think certain stocks will be well. I don't like Jets as an ETF. I would rather be in Delta. I would rather be in Southwest Air, maybe Alaska Air, things that won't get hurt so much by any, type of issues. Like United has so many flights overseas, you never know. By the way, Tiger is killing it. Yes. So Tiger, there's some people suffering, some people killing it. The ones killing it are the ones in and out of it over and over and over again because you understand the stock like your family. I teach a lesson on my platform, 349 Trading. Pick one stock. Here's a free lesson. Pick one stock. Treat it as your family. Know its day range. Know its weekly range. Know how it trades usually so that if it's at a bottom, you could buy some stock, scalp it, or options. I traded WYNN last year, WYNN. I traded it 83 times last year for a $2,500 profit. No, 2,500% profit. Okay, next question, please. Sorry, get sidetracked. Oh, Chewy. Okay. I don't know Chewy stock, but I know Jim Cramer likes it. And whenever anybody talks about a stock like that, and if Jim Cramer likes a stock, I won't go into stock. He's like the kiss of death. Anything he says is the opposite. He's a sellout. And retweet this. Anybody watching this right now, Share this video. Let's make it go viral. Jim Cramer's a sellout. Nobody gets online like I do, speaks about it in the market for an hour like this, just answering questions about certain stocks, what I'm seeing in the market, and being right about the market. All these people are such sellouts. They give you the answers the institutions want you to hear. Oh, inflation's a worry. Oh, we should worry about this. Oh, the numbers are coming out tomorrow. Bullshit. Everything is supply and demand. Everything is simplified. That's what I do. I look at stocks. I tell you what I see. Okay, Chewy, boom. What do I see? Last 3 out of 5 days buying, I would be buying Chewy. God, if Jim Cramer likes the stock, I won't be buying Chewy. But the W looks like it's forming. So anybody want to look it up? CHWY. Where could Chewy go? Now, if it's going to rebound, it's going to go right about $80. So it's at $70 today. What would I do? If you're interested in buying Chewy, look for a dip. You don't want to pay $70. You'd like to pay $69 and something. I'd go $69. And then what would I sell it at? I'd sell it at $80. So that would be $11. 69 to 80 is like 15%, 16%. All right, so that's what I'd be looking at. Next question. It looks decent, but yes, if Jim Cramer's in that, I win. What do I think about some trade? Oh, Discovery, isn't that the one that tanked? Anytime there's a merger and they already have a set term today, they're actually merging with Time Warner, I believe, right? AOL Time Warner or just Time Warner. I would stay away from that unless you are so smart that you're on Wall Street and you see all the paperwork and you delve into that and spend hours. And these guys spend hours to figure out valuations here. And if a stock is hitting a certain point, that's when they know it's going to. There's no extra meat on the bones for you guys. So yes, I wouldn't even. I know love. I know you get creative and you like to outthink everybody else. I would stay the hell away from that one. All right, next question, please. Again, it's all about when you follow me. Risk versus rewards. You never hear that from other gurus. It's like, hey, I told you this was going up. Hey, blah, 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 whatever. I don't give a shit about that. It's risk versus reward. We are using hard-earned money. I hate losing. Do you hate losing? If you hate losing, why are you not on my platform? I got you. Yeah, seriously, you should be on my platform. All right. Bought Snap at the dip. 521 calls, $54 calls. I'm going to look at Snap for you. Again, Snap is a tech stock. Snap is what I'm telling you. If we're on the W leg of the NASDAQ and it's going to go up, even if it doesn't go up day by day, like today's a hard day or something like that, because tech went off 50 points, the point is it's bullish, all right? There was a struggle. If we fell off the cliff and instead of being down 150, we were down 350, then you could say, yeah, tech sucks, Matt, you're wrong. But other than that, I was right. I don't care if people want to sell off. You guys want to sell your shares of tech stock, cheap, whatever it is, time the market, go ahead. I'm holding, I'm buying. That's what Matt does. All right, Snap. Sorry, I'm still looking at Chewy there. SNAP. Oh, yeah. So didn't Chris Sane say Snap was buy calls, buy puts on Snap? Okay, volume is extremely light, so I'm not crazy about the last time you had good volume was April 23rd. There's unusual activity. I heard. Again, it'll go with the NASDAQ. So, yeah, I don't mind your play. What'd you buy? 54.5, and we're a little under. We're 54 right now. Yeah, you could be at 54 tomorrow, 69 cents, hoping to see 55 by Friday. No, you should hope to see. I'll tell you what you're going to see by Friday. If you're right, you're probably going to see $56. So congratulations. Oh, you're up 85% already. You're going to beat that. Don't worry about it, man. You'll see better. Next question. Good job, Daniel. The point is, anybody, I didn't talk about Snap. You can enter into whatever positions you want. Pick a stock, BL, do, blah, blah, whatever it is. You're looking for the dip on the morning that it's going to open. You think the market's going to sell off. Now, lately, we've been having a double dip where the market sells off and then goes lower. Plan ahead. You're like, if my stock, whatever it is, say you pick a $20 stock, you want to plan for it to be off 4%, so 80 cents. So if you're buying stock, you'd be like, okay, I'll buy the stock at 19.20. You put in your bid and you go back to sleep, or you go to work, or you ride the bus, or you go to the beach. Point is, you don't watch the screen. You don't have to stare at the screen for 19.20 to get activated. If you picked right and it hits 19.20, great. If you get home from the beach and your stock's $20 and you're like, oh, let me check my phone. You check your phone. Guess what? It probably crossed over 19.20. So by planning ahead, you don't have to watch the stock like that. Okay, it's crazy. I was going to say one more thing, but we'll just, yeah, I like your Snap deal. It's going to go with the NASDAQ. What do I think of Trit acquiring Invoice Bazaar? I know it's after hours 1%. It's at 550 now. Unfortunately, if you saw volume there, I'm just going to assume TRIT's volume was under $1 million. I mean, under 1 million shares. If there was more than 1 million shares, then that would be a good thing. However, volume's so light. The stock is 500,000 shares. It's so light, the volume. Yes, there's been buying for 2 days. But if somebody like me wanted to get into the market and I wanted to force TRIT down, I could put it at under $4.90 just by me alone. If someone gave me a couple $1 million, I could kill this stock. So the point is, be very cautious. There are institutions behind it. So say they come out with some real news and they can show how Invoice Bazaar is going to make them profit. And some institutions like, yeah, they buy 3 million shares. The stock's at 750. So yeah, it's a good stock to own. Somebody asked me, should I get rid of it the other day? No, I would hold it. Why? Because it's so beaten up. I think it's a $10 stock, but until there's volume, I can't get behind it. So because I know it could be manipulated. That's the whole thing. I don't want to put you guys into a stock that can be manipulated down. Why? I mean, you suffer enough. The market's hard enough. You guys are trading against computers. You understand 90% of the trades that Wall Street does is all algorithms, which is why I'm helpful. I understand the way computers trade. It's just the sickest thing. And that's what I'm trying to share with you. So when I'm calling these market times and these different dips and things that we're seeing, it's because I just understand it. I see the patterns. Next question, please. Okay. You bought an Apple call, $135 strike for $3.50 August. Do I think Apple can get to the $140 range by then? Yes, probably. Again, you probably bought it today, I'm thinking, right? Because Apple's been pretty beaten up. You probably would have had to pay a lot of money if you got in the money like I like to do. So, yeah, I don't think that's a bad play. Apple's at 126. You bought a 135. There was some selling today, but there was buying 3 out of 4 days. So here's what you're going to see in Apple tomorrow. And here's another reason. You'll be like, hey, let me see if this dude's for real, okay? So here's my test. And please, I challenge myself all the time. And if you're watching my videos, I tell you specific prices and things that I'm seeing. So you could write them down and be like, okay, the dude knows this stuff, or this dude is on crack. I don't care. Make a judgment call. It's either black or white. You like me, you don't. You think I'm accurate, you don't. But if you think I'm accurate, share this shit. Pay it forward. Tell your friend about me. Tell your other friend about me. Oh, he's $100. Who cares? We turned little piles into big. That one dude that I tweeted, $84. He's got $564. Great. Not Romeo. I forget the name. Okay, you bought an Apple call. So can we see that? Yes, Apple could spike. How far can Apple spike? What's your call? August. Okay, so you have a couple months. So let's go to a 3-month. I would be selling, if you get a spike of like $8, say you get a spike to 135 or 134, I would sell my Apple call. Why? Because that time value of money, say you get a spike in the next week or two, and it goes to 135, 136, it will probably go higher. However, your call, if you're at 135 right now, that would be buying like a 126 call. So let's just look at that for, and I'll explain my reasoning in a second. August, right? 125 call, it's about $8. So yeah, so I'm saying if it goes up $10, you would still have the same time basically, and your call would basically be worth the same. So yeah, you'd make 200%. So you're not looking for it to go up to 140 or 145. That's not what you care for, Alfonso. You want to know, will Apple go to 135 in this next bull NASDAQ run that Matt is calling? So Matt says the NASDAQ is going to be strong for a couple of weeks before it pulls back. Will Apple go to 135 by then? No. Apple will probably go to 133 at the highest, maybe 133 and a half, maybe 134. If Apple hits 134, have your target in mind. Use the delta from the option, the price change in the stock, and put in your sell order each day. So if it spikes one day, you're going to get $7. You don't have to watch the stock. If you want 100% return, put in your order tomorrow. Here's a lesson for everybody. Plan ahead. Put in your order tomorrow to sell that same option for $7. Is it going to hit tomorrow? Probably not. Put the order in on Wednesday. Is it going to hit on Wednesday? Probably not. On Thursday. Will it hit? If you do that every time for the next 2 weeks, I bet you one day Apple, your option is going to be worth $7. So rather than watching the screen every day, put in your sale order every day. And everybody do this. Whatever options you own, put in 100% return for the next day or whatever. If it spikes, congratulations. You don't have to watch it. Why would you make yourself crazy? Next question, please. You guys are doing great. Thanks for hanging out. Does that mean HYRE is a candidate for puts? That's a good question. I doubt it. What I told this gentleman today when he asked me about this stock, HYRE, he said to me, Matt, this stock has no news, but it's up 7%. I have puts and they're down 40%. What should I do? Would you sell? Can you look at it for me? I usually don't get involved. But I understand the nerves. If I had an option position that I entered into in the morning and I was down 40% and it looks like it could spike higher and I'd lose more money, I'd be reaching out to everybody. Mother Teresa, what do you think about this option? Point is, I said to him, Here's the problem. If the market turns around like I think it's going to, your stock might spike up to 11% or 12%. I would get out because your option, instead of losing 40%, you might lose 80%. And nobody wants to do that overnight. So maybe puts are good. Yes. But I don't want to get involved unless I know why it was spiking, what the stock is. Again, so I told about trading just one stock. If you pick one position and you trade it so freaking good, guess what you're going to be? You're going to make so much money. So you don't need to chase. I helped somebody today who chased every single stock that these gurus talk about on Webull. It upsets me. So if you're seeing me upset, they were talking about APRE. They were talking about a different stock. They were talking about skills. They were talking about all of these other stocks. Oh, I was so upset, man. I'm sorry. Because I was talking to her, and she's a nice lady. And I'm like, did you buy this at the highest point? Now, she had eBet Sports or one of these sports things that moved, actually. She had call options that were $34 options. And I told her, let me look at the stock. And I said, you're lucky. It could be up to like 30. If it spikes, you should sell it. And it went up to $30 today. It must have been up like 10% today. The point is, GBLV, something like that. You guys probably know that. Anyway, the point was, even with the spike today and its all-time high, it still never reached $34. So what was she doing buying $34 calls that are going to expire worthless if the stock ends where it is right now? That's why in the money, it's very important. All right, please, let's go to the next question. I'm hoping you guys have more stocks for me so I can clear up my phone here. We're Apple. Let's see. So again, it's always not where do I think, yes, you guys always have specific positions. Okay. Well, this is fine because I just spoke about EH today, and it's on my list, and hopefully I can just find it real quick, which is obviously not happening. Yeah, I should just type this stuff in, man. I'm sorry for the delay. EH. So it's crazy. I almost gave this as my tracker today. Why? Because it was moving so fluently with the market, and then I was like, okay, at one point it was down. If you look at the 1 day of EH, I bet it actually looks like the market. Point is, I like the company. Can it get to 2250? Yeah, I'm sure it could. Again, we haven't had a good day in the NASDAQ. I'm expecting one of these days in the NASDAQ, we're going to get that 220 points to the upside, 230, 240, 250, and your stocks can go up 8%, 7% instead of 1.5 or 2, or it goes down 5%. You know how we hate that? Yes, and if you're in Tiger moves 10%. So yeah, one day this week, TIGR, it's going to move $1.70, so it'll be $18.70. I'm not telling you to buy Tiger calls. I'm telling you, write it down, see if that's right. So will this one go to $22.50 by Friday? Yes, it's probably going to hit $23 at some point this week. So I don't know which option you have, but plan ahead. If you think it's going to hit $23 and like 10 cents, you can sell the option for like 60 cents each. I don't know what you paid for it. But let's go on next stock, please. I don't want to tie up. But I think it's good, Christian. We need a positive market. Does anyone hold BTU? I had it last week. I sold it on Friday at the peak. I was thinking it was done. Today it had a good run, and then it started dropping. Now, today it ran up like 20 to 25%. Okay, so that's probably a more speculative play. BTU, which energy company is that? Is it like Peabody? Yeah, Peabody. Okay, yeah, I know there's something going on with Peabody. It's really weird. I don't know what the news was today, but yes, I saw it spiked, and it spiked off volume. So there was high demand. And if you look at the turnover, again, I haven't looked yet. I'm going to guess on the turnover. So when you see the turnover in the upper left-hand corner, it tells you how many people are buying and selling the stock based on the number of shares outstanding. So if this company has 100 million shares outstanding and they trade 44 million, the turnover would be just ridiculously high because they only have 100, whatever it is. So let's go. The shares outstanding are 98. So the turnover would be about 50%. It's 45%, which means if they have 98 million shares and they traded 44 million shares, at least half of the shares basically got changed, So if anybody was holding this, they definitely sold into it today, whatever the move was. Again, energy stock, it was as low as 80 cents, and it's hitting an all-time high. So yeah, stocks when they hit all-time highs, I spoke about it before. BTU, stocks that hit all-time highs will probably go up about 40% in the next couple of weeks. So if BTU is that, I'll give you a price target. We love making these guessing games. $8.60. It's going to go up another $2.20. It'll be above $10.80 sometime in the next month. I hope somebody write this down. Somebody who's watching this, please write down all my picks. Report back to me. I'll give you a free session, okay? Here's the thing. Somebody write down everything I've said during this session, right? And report back to me. Send me like a spreadsheet. Here, you made 10 picks. Here's the dates you gave. Here's this. The first person to send that to me, tweet it to me, whatever, I'm going to give you a free tutoring session for like 20 minutes. We'll talk about your positions. We'll talk about options. We'll talk about strategy. We'll talk about whatever you want. 20-minute session. I said Facebook. I was talking about 315 that it would go to 390 by this tight. I say a lot of stuff. So please, anybody that wants to do it, and we'll go revisit it in a couple months from now. By that time, I'll have like 600,000 people following me, right? All right, next question. Let's go on. When Tiger pops, I have JDs at you. I don't know the market, but it's funny that you mentioned Tiger because I just mentioned it before. And I said the tech has been so beat up. So if you have a 4-letter stock, I was saying this every session, every live session. You have a 4-letter stock, you're probably getting beat up. Your stock's probably down 3%, 5%, 8%, 6%. Point was, it went to move the other day. Tech was beat up. They introduced it into a Chinese exchange. It didn't move more than like a couple cents because tech was so beat up. Then they made another some type of small announcement. Again, tech was beat up, and I told you someone was supporting the stock in the morning. They bought it, they pushed it up, they put it in a wall. There was huge support for it, yet there was a huge market sell-off. So you can't fight the market sell-off. As much as I want to be right about something, you can't fight a market sell-off. So will Tiger pop? I don't know what June 18th calls you have, but yes, I think Tiger will pop. I mentioned it earlier. Don't be surprised if you see 10% there. So we're at $17, $18.70. So you're probably going to close past 1870. I'll say $19 by the week's end, okay? Because we know I am bullish tech, NASDAQ, anything with 4 letters, I think will be higher tomorrow than today, the next day than the next day. Okay, I'll tell you, when it reverses, when it turns, and we go back into Dow stocks and tech isn't so strong, I will tell you. And you're saying some tech stocks aren't so strong. Yeah, if you're in a piece of crap tech stock and it's down to like $1 or 80 cents or whatever it is, or it's a biotech stock, I hate those. You're in a SPAC, it's getting hit. I can't help you. It doesn't move with the market. There are some things that are move market. If you watch my video from the start today, I mentioned there are going to be certain stocks that move with the market and everything else will struggle. They'll move with the market. You're in a good one. It has to have earnings. It has to have some type of solubility. Okay, next question, please. Yeah, you might. I know it looks like I'm waving bugs away. What price point do you plan to exit my plug options? So yes, I have some plug options expiring this Thursday, Friday. I also have plug options. Remember how I averaged down? Yeah, you remember? September plug options. So I'm holding on to my plug options so I might actually lose on this options that expire on Friday. I might lose. Let's say I lose 50%. I guarantee you on my plug options out in September, and they're all on my spreadsheet. Anybody that's like confused what I'm doing, look on my spreadsheet. It's on the app. Okay, it's on the website. You go to the spreadsheet, you look at plug options down at the bottom. You'll be like, okay, he has these 2 expiring here. You pay this, so he's going to lose 500 here, 700 here. He's telling me he's going to make 14 on this. That would have to be the price. That's what you do. You figure out what you need to make. Say you're losing 500 here, but you can make it here on the same stock. So yes, average out the right way. Price point for this one, I don't know. It depends what plug does. If the NASDAQ goes good, again, I'm looking for a 200-point day. If the NASDAQ goes good, plug's going to move 9% one of these days. So that's 2.5 points or something like that. So I'm going to plan ahead. If it's at 25 and it moves 2.5, that's 27.50. If I get 27.50 before Thursday or something like that, I'm going to try and get max value. Hopefully it happens tomorrow. Hopefully it happens on Wednesday. Hopefully someone pays me something close to what I want to get out of the position. Yes, I know it's a losing position. I'm not going to get $2. It's not going to 30. But if I see it going to 30, I'll get excited. I'll hold on. All right, next question, please. You can always average down the right way. CSIQ. Again, Canadian Solar's been extremely beat up. Canadian has earnings this week, 520. Any input going forward? Options are pretty beat up. Okay, so gentlemen, here's your problem with Canadian Solar. I mentioned this at 46. I said the demand was gone. What is it now? 38, 37? I hope it's not under 37. CSIQ, and it is $36. I mentioned it at 46 when I was selling my position. I saw the volume, it was gone. I saw the demand was gone. It happened to be for the whole industry. I got lucky. Point is, I saw it. I said, I don't want to be in that. Do I think you could average down? I wouldn't average down on those options. I would go out a few months. So again, go to September. If you think CSIQ can rebound, and again, I like Canadian Solar, and there's been good demand, and it's extremely beat up. And yes, they have earnings 520. Yeah, I would probably be buying this. I would buy it. I would buy September options. Why? Because if they miss earnings, you know what's going to happen to Canadian Solar? It will probably go to $30. However, if they do well, you know where it'll go? 44. So for me, it's worth the risk. I would take the chance. All right? It is risky. You heard it here first. Next question, please. Clove, another short attack. Should we run? Yes, you should run. Why? Because I saw volume this morning in Clove. Someone was trying to manipulate it up 8% this pre-market, and they couldn't hold it, and it couldn't hold the market, and it was up 3%. It couldn't hold that. It was up 2%. It couldn't hold that, and then I think it ended up down 10%. Another short attack. Good luck, man. I've been privy to too many short attacks. If you guys, anybody, if you've been in a stock, it's been short attacked, you know what I decided? I get out now. I get out. If there's an offering, I get out. If there's a short attack, I get out. Yeah, run. I would run. Sorry. Honest question. Easy. I don't have to look it up, Tony. Next question, please. So let's see. There's a lot of posting as well, YouTube, Reddit, that they're going to short Tesla. Tesla's rebounded twice. Okay. You know who would have to short Tesla? Someone with a lot of money. They couldn't even short Tesla if they want to. Why? Because Kathy Wood at ARK would put up whatever. She would buy $1 billion. She would own 40% of Tesla, just like Argos owned that other company that went belly up. So, yeah, they could talk, man. I don't believe that. I don't. Again, it's always risk versus reward. If you want to follow Reddit or something like that, baloney. The guys on Webull, man, I try and educate people all the time. And they're like, you're an idiot. You're a fool. I don't like that. AMT's the moon, whatever it is. Yeah, AMC's going up. I mentioned that at $9.60. I'm not taking credit for it, but I said it's more likely it goes to $20 than $6. All right. GameStop, I have been wrong. I think GameStop went to $186 today or something like that. I think GameStop deserves to be at $86. Next question. Matt with 2 T's, bro. How do I feel about Airbnb? I love the company. I use them all the time. I feel like they're a monopoly and they keep going down. I'm down 20%. It seems to be a 20-day down streak. Okay, well, that really sucks, bro. Anytime you see a 20-day down streak, if you saw it at like 7 days, I would tell you to get out. So let me find Airbnb. I thought it was like Airbnb. No? Yeah, there it is. Okay. It's not a 20-day down still. I mean, it is, but there has been demand. But today, whatever happened today, bro, there was just way too much selling on it. They hated it today. It went from 137 to 132. Just to see if there's any hope here. It seemed to do a triple bottom almost. Yeah, I mean, it could either be really good right now, Gustavo, or I would get out and run. Here's what I would do, okay? You're down 20% in stock, I'm assuming. There you go. Sell your stock, all right? You're down 20%. Let's say you played with $1,000, okay? So you're down $200. You have $800. You want to make your 20% back. Use the $800. Use about half of it, $400. Buy a call option, all right? Buy it out in September. Why? Because even if this takes the stock a little longer, another 2 weeks or another month to turn around, it's going to turn around. The stock looks so beat up right now that I can't imagine it going down unless they think it's worth $100. But again, if it is worth $100, guess what you're going to do? So you sell the money, right? You take the thing out and you buy one option, and you spend $400. Guess what? It goes down to $100. You're going to have $400 left anyway. You have the $400 sitting on the side because you only use $400 plus you're down $200. So that's $6 you lose. Or you stay in the stock, you kill yourself 1,000 paper cuts every day because every day it's going to go down a little more. And after a month, you're going to be so nauseous and like throw up on yourself, and you're going to lose the $400 anyway. The point is, if you average down, you're going to lose it. So I would sell your stock on the peak, whatever that is tomorrow. Say it bounces to 135. Sell my stock. Wait for it to go back to 133, 132. I would buy one option. I'd spend $400. I'd pick September. So whatever the cheapest one has, even if you buy like a $150 call option, you have till September. If it's $4, it's $4 for a reason. Next question. We're going to finish up real quick. I'm not real quick, but it's getting late. 2,000 shares of staff. Should I drop these bags? Yes, you should. I teach a lesson every day. If you're stepping in shit, step out of it. I've heard many gurus, and we all know who I'm talking about, talk about, yeah, staff's great. Oh, it's going to $2. Oh, it's $1.20, then $1, then 80, whatever. Staff's poop. It's probably like 51 cents now. Let's check it out. I haven't seen staff in months. I knew it was 83 cents. I'm assuming it's lower than that though, right? Staffing 360, 57 cents. Great. So yeah, if you get a bounce, maybe it goes to 61 cents. I would get the hell out of there. I'm assuming you have a lot of shares. Everybody, when a stock is like 70 cents, 5 cents, 8 cents, you're like, yo, I bought 10,000 shares of it. It's not about that. It's about percentage gain. So say you buy 1,000 shares of a stock at $1, like Sundial, or $2 when it was. When it's 80 cents, guess what? You're down 20%. All right? It doesn't change. If you put in 1,000, you're down 20%. If you put in 10,000, you're down 20%. If you put in 100,000, it doesn't matter. You don't want to be down. Why the heck would you guys buy these crappy stocks? Oh, the other one, Castor Marine, please. And then they did that offering. It was like 90 cents. I told you it was going to 40 cents, probably 50 cents now. All right, next question, please. Get out of those bags. Those are bad bags. You could do better with yourself. Okay, CPNG, has it reached the bottom? I love these questions because if anybody doesn't know, how does Matt pick stocks? I'm a bottom feeder. If you've heard that point, but it doesn't mean I'm a bottom feeder like I'm a sneaky guy. I'm a bottom feeder. I look for the most beat up, beat up stock, whether it was short attack and lied about, or this or that, or just heavy selling, or institutions got effed and they sold and it's so cheap now and whatever. That's the stock I like. Limited downside, max potential. CPNG. So you're telling me that's the bottom feeder stock, CPNG. So it's a great thing. Oh, Coupang, yeah. Nope, it's definitely not done. It could retest the bottom, which means it could definitely retest like probably $31. We're at $35. Coupang, $35. CPNG. It could retest. There was heavy selling today. It only went down 3.5%. I get it. And maybe you think it bounces back. And if, again, I think Nasdaq's going to be strong. So I don't want to tell you to sell this. It bounces hard back 10% to 38. And you're like, that dude told me get out of that. If the Nasdaq bounces, you'll know better than I would about this. Has it reached the bottom? I don't know. I see potential downside worse than I see upside. I say 50-50 that it could go to 31 or it could bounce to 38, 39. So, yeah, you flip the coin. I don't want to be involved. Next question. Water's done, by the way. Hey, Matt, what are my thoughts on Disney calls? Yeah, Disney's tough. You know why? Because when I call the bottom, and these are great questions, and it just happens they're right after each other. But when I call the bottom on a stock, I show momentum. Right now, I know Disney was just sold off. It doesn't reverse course like 180%, like boom, 180 degrees, just change. There's a bottom. Then when you think they're bottom, it goes even lower. Then there's some support, and then somebody sells off into it. So it's almost like a wave. Then it finally turns around. Stocks that have been beaten up usually take more than 2 days. And Disney was just sold off yesterday, and it just sold off into earnings. And I say Disney's going to take longer. So if you like that position, Tyler, I'm not saying it's a bad position, wait 2 weeks, wait a week. All right? Disney's not going anywhere anytime soon. There are other better stocks. I'd rather put you in airlines or cruise ships, casinos. They're all return plays. Disney came out with earnings. If they killed it, it would be great. I'll look at Disney real quick, but just in case I'm completely wrong about it. But I would be fearful of Disney. 170, heavy selling, even with buying yesterday, huge volume today. Yeah, Disney's not a good one. No, we don't like Disney. Matt, no, like Disney. Jim Cramer probably loves Disney. Matt, no. Okay, next question, please. Okay, I have 9 Tiger, 22.5 strikes, and you're down 90%. I don't want to throw new money at all. What should you do? Well, when Tiger was down to $15.5 or $16, and I spoke about this on multiple videos, so this isn't the first time, and I know I see your screen name. I remember it. You got to go out. So you go up to September when it was $15.50 or $16.50. You buy some September calls at $20. You probably pay $200 a contract. You buy 5 of them, spend $1,000. Okay, you obviously spent more when you were buying the 9 contracts. The point is, anytime Tiger spikes like it did 2 days, a couple days ago, you sell on the peak and you give yourself extra time. If you sold on the other day when it spiked to like $18 and you sold there at a loss, you could have used that money. And when it dipped down to $16.50, you could have bought $20 calls out a few months, like I've suggested, and you'd probably be up like 20 or 40%. So rather than watching a bad position, now it's good that you're not averaging down with something that's down 90% because that would just be lunacy. But you want to buy it when it's going down. You don't want to buy it when it goes up 5% today and it's at $17 and then it goes up 8% tomorrow. That's just a guess, and it's at $18 or something like that. It would be terrible to do. Next question, please. We always want to buy when something's going down. We always want to average out using some safer plays like September. How is it 40%, 10%? What is the stock? I wouldn't mess with that stock. It looks dangerous to me. Again, what if it spikes another 40%? Who's to call the top? Who's to call the bottom? Next question. I'm just trying to kill off my questions. We're over an hour, and you guys are great and sticking with me, so I'm going to try and get as many questions as possible. All right, join our community. That's it. Just watching other questions. Any other none? No more questions? All right, you guys are awesome, man. I will see you, everybody, tomorrow. Peace.